Hey everyone, welcome to Money Wire Work. Today I'm going to be going through a comment I saw on another YouTube channel. I think it'll be a good lesson for newer traders or people that want to learn how to trade or have emotional discipline. First, I just want to cover SPY right now, just see where it's at as this Monday and new week opens. So right now, just for a review, we have the moving averages up here. So I said last week that I thought that the price action would go through the 50 moving average, the 50-day moving average, potentially go through the 200 and reach the 100-day moving average. Right now, it does seem to be bouncing off of this blue line right here, which is the 200-day moving average. So we'll see what happens. But if you look, at least as of right now, we see a doji candle right here. So we have this strong uptrend, little bit of a weak candlestick down here, a little bit of a weak wick, I should say. Bigger wick right here. This is pretty strong for a price action up still, even though it does have still a wick on both sides. But now we see a compression of that price action. So that can potentially signal a reversal. As far as the TSI is concerned, there is no inflection to the downside yet. But if you give this time and, if the next candle, one or two candles, is below this current candle right now, you're going to start to see this TSI turn down. Now, keep in mind also that these moving averages are always trying to get back to the price action. So theoretically, if this were to just move completely sideways, all of these moving averages eventually would converge to the price action. So as this price action, if it were to come back down, you would start to see this purple moving average come back down and try and chase it, I guess, more or less. So with that being said, right now we are still above these blue moving averages right here. But considering the fact that we're still using the 50-day, the 100-day, and the 200-day by and large as a resistance, we're not really considering that necessarily as an entry level for a long position. I said last week, I think there is still downside in the market yet. I think it's going to go below this low right here, which is 365. We'll have to watch it and see. If this comes down and results in a higher low and starts to come back up and it goes through all these moving averages, that's a sign that the sentiment is probably changing and you might want to consider a long position then. So with that being said, I just want to get into a comment I saw on another investment YouTube channel. Now, just keep in mind that I watch many of these YouTube channels. Some I take advice from, some I don't. I weigh different channels more than others. Take everything you see, including this channel, with a grain of salt. You always want to do your own homework. I and everyone else on here are not financial advisors. As far as I'm aware, I haven't come across anyone that is claiming to be a financial advisor on YouTube. I definitely am not. So just know, if you recognize this comment, just know that I don't necessarily endorse everything on the channel that this comment is on, or necessarily even the comments or anything too. All right. So there's a commenter here. He says, this economic recession is going to be big and everyone needs to prepare before getting hit. However, I am new to the stock market. Every stock that I bought so far, I was out of luck because I bought them when they were expensive. I feel I missed on all the stock opportunities so far for the tech stocks. I believe having 100K yearly income would be a good investment, so I want to plug all my savings into the stock market. I know this sounds a bit dull, but I would like to know if I should learn investing or let someone else, more capable like a financial coach, do it for me. Please share your thoughts. I'm kind of tired of searching for good stocks to buy and losing all the good opportunities. So just a couple of things here. For one, he's implying definitely that he's got FOMO in the market right now, which is a big mistake. Whether you're a trader or whether you're a long-term investor, you need to be patient. You need to practice patience because eventually everyone is going to experience this right here, okay? It was easier, I should say, to make money on this upside. And if you're eager to get into the market, that's great, but take that time to study the market and decide your strategy, see what works and what doesn't work. Follow who is giving good advice and who is giving bad advice. Follow people's track records because eventually everything is going to come back down. The stock market goes up and it's overvalued, and it goes down and it's undervalued, okay? It's never really actually at the fair value for very long. So if you're eager to get into the market and you're trying to make some money and you have FOMO, you're going to buy at the top and then you're going to hold and you're going to watch all your investments go down. Look, no one's perfect. Even the most experienced traders do that from time to time. They get caught in trades. It's whether you overall have a good risk management and overall you know how to actually get out of a bad trade, still making a profit or breaking even or limiting losses. Okay, so the first thing is if you want to get in the market, just because you want to get in, the market doesn't know that. It's not necessarily thinking that this is the right time for you. Okay, you always need to be patient because the odds that you want to get in the market and it just so happens to be the perfect time to get into the market, whether it's a trader or an investor, are highly unlikely. Okay, so day one, you want to get in the market. Day two, you should be learning and keeping money on the sidelines and waiting for that opportunity. So this guy here, it sounds like he just had really high FOMO. He said he bought, right here, he said, I bought them when they were expensive. And now he's having more FOMO because not only did he miss the opportunity the first time, now he's got FOMO and is trying to get back in. So now he's eager and he sees this uptrend right here. And maybe he's probably thinking, oh, it's going back up. I need to get in because I missed it the last time. When it could still go down right now. My overall sentiment is we're going to see a down. We're going to see a down. I think it's fair to say we're going to see a down. Where the bottom is if it's a higher low or down even more. I think it's going to go down even more. But at the same time, no one knows, like I said before. Okay, I'm going to say that a lot. No one knows what the market's going to do. You have to include that in your strategy. So he says opportunity so far for tech stocks he missed out on, but it sounds like he's trying to invest. So he should be happy that this market is going down if they're overvalued. If he feels they're overvalued, then he should be glad this is going down and he should be relaxing and taking this time to learn, actively get familiar with more companies, see what his price targets are, and then when they meet those price targets, buy in. He says he's asking whether or not he should continue to learn or if he should hire someone else. I don't really have a particular opinion about whether you should hire someone else or not. Some numbers suggest that most hedge funds don't even beat the market. I think Warren Buffett was challenged at one point in time to go toe-to-toe with another hedge fund. And he said, yeah, I'll take the S&P 500 because he overall understands that most hedge funds aren't going to beat the S&P 500. And so, as far as trading, there's different things you can do to take advantage of the trading situation. So I really like spreads, credit spreads. I'll get into that later, but it basically allows you to have more gains at the other side. You have quicker losses as well. But credit spreads allow you to cap your gains or allow you to cap your losses, but the downside is it caps your gains. Overall, it's safer to do than just buying a put or buying a call, but it allows you to actually grow your account a lot faster. That's neither here or there. So this commenter right here needs to figure out whether he's a trader or an investor because he is very impatient, but at the same time, he's claiming to be an investor or someone that wants to be an investor, which is going to take years to play out. Okay, you shouldn't even have FOMO as a trader, let alone an investor. So my advice, I guess, just to this guy, as far as not financial advice, but just overall advice, is if you're gonna be involved with something, especially something that has your money, you should know a little bit about it. Have some basics. Should probably know a little bit more than just a little bit about it, and that's whether or not someone is taking over that task or not. Just have a general understanding of what you're doing. So he also sort of implies, this is the last thing I'll get into, he sort of implies that there's all these opportunities that are missed out there. There's always opportunities. You can go to channels like Everything Money, who right now are taking big advantages of this decline. They're finding some stocks that they've been wanting to buy for years and for a long time while this whole bull run was going, and now they're starting to buy. So if you're a long-term investor, there's tons of opportunities out there. If you're a trader, you have the advantage of being able to take advantage of the downside as either, you know, a short or a credit spread if you don't have so much capital. Because not only do credit spreads save you on risk management, but also saves you on capital as well. So that's all I have for this video. I guess the last thing I'll just say is be patient. Patience is usually key. Have discipline. You as a trader or an investor, no matter who you are, you should be able to have tolerance of watching your account go down at certain times. You have to have emotional discipline. It's something that's going to take, for many times, for many people, it just takes the market to go down, to wipe out their account, to basically be a better risk manager. You know, I made money all through up here. I started to sell out of my positions as it broke this trend channel. If I were to go back, I would have sold more. I kept some in. I would have sold more so that I had more cash on the side for when it eventually went back up. So everything that you mess up on, or anything that you didn't play perfect, take it as a learning opportunity. And that's how you're going to grow in this market, because the market can be brutal. The market can be irrational as longer than you can be solvent. All right, so I appreciate you guys watching this video. If you like more content, please like, subscribe. I appreciate comments, and also hit the notification bell if you do subscribe, so you can see all my latest videos. I appreciate it.